Hi viewers, so let's start today's analysis. I think a very mixed kind of a day today. Market got what it expected, but still could not rally as it would have expected to. So today we'll take very less time on global markets. I'll just take 2, 3, 4 minutes, and we'll just talk about Indian market because something very important has happened today, and I just try to give an in-depth analysis on what is my view on this, whatever happened today. So global markets. Yesterday we had a weak session from Dow. It was anyways when we were closing, Dow futures were down. Nasdaq was slightly up because of the results of some of the companies of tech, which were they were reacting, and Dow was also down mostly because of one company which gave a very bad result, and it was around 20% down. I'm forgetting the name, but it was mostly reacting to that particular company. If we talk about the parameters, so bond yields are still hovering around 4.42, to slight comfort from the peak of 4.7. Dollar index has also cooled off. It's around 107.5, and probably it is trying to settle down there. So those are looking good. And today again, rupee, in spite of the interest rate cuts, rupee was stronger than the US, around 12 to 15 paisa. So that's all the broad parameters. And crude are also hovering around $74, which is in a pretty comfortable level. Nothing from China. China markets are good today. They closed in green, and I think they were around 0.8, 0.9% up. And even Europe markets are trading higher. So no issues at all from the global markets. Now we'll straight away come to the Indian markets. So as expected yesterday, and I've been telling that all the economists were saying that there was a reduction, or there was expectation of reduction of 0.5% rate cut. It has happened. RBI Governor Mr. Sanjay Malhotra has given his first MPC meeting review today, and some of the key takeaways was that first, of course, we got the interest rate cut. Second, he looked from his language that he wants to take forward the growth. He's concerned about the growth coming down, and he really wants the growth of India to go up. That's what I can see from the way he was talking. Also, the numbers which were shown, it was looking like the projection for inflation is now 4.2%, which is actually lower, or which is very close to the band of comfort band for RBI, which is 4 to 6%. In fact, for FY26 and I think Q3, he gave a target of 3.8%, which is lower than the target of RBI, which is 4%. That means he is not very worried on the inflation part, and the inflation numbers will look to continue to look benign, which means that there are chances that we may continue to get some rate cuts. As I was saying yesterday, also that economists are expecting at least 3 rate cuts for the year, and some are expecting 4. So first has started. Probably there are some more to come. In the inaugural speech, he started with a lot of concerns about the global markets in terms of trade war, what is happening with China, with US, whatever is happening in terms of wars, geopolitical tensions. So he stated all these things, and rupee continuously weakening. So he gave all those commentary, but apart from that, even after saying all these things, he gave a 0.5% rate cut. So that is one thing which is given. Second, what he has given is that the inflation target is around 4.2%. So again, very comfort level. That's again good news. Third thing which he told was that they have now postponed the LCR norms, new LCR norms, which previous governor wanted to start from March onwards, March of 25. They have been now postponed to FY26, which is March 26. So 31st March 2026, LCR norms will not apply. That is again a very big positive for the banks. It will give them a lot of leverage, it will give them a lot of liquidity, and that is a very big plus for the banks. So that's another part. Fourth part, what he told was that he will make sure that there's enough liquidity in the system, and they will continue to take measures to maintain the liquidity. So that's again a very positive news which he gave. The only negative which I could see from the commentary was the reduction in the GDP rates. So he has brought down the GDP projection from FY26 to around 6.7% now. But that should not be a shocker, because if you see the Nirmala Sitharaman's speech during budget time, and also the economic survey, the projection has been made for FY26 for 6.3 to 6.8%. So RBI governor has given 6.7%, although he mentioned that it is not RBI's figure, and he named, I think, Mobic something, he named the agency who has given the growth forecast. So probably he was not very confident on the growth numbers, GDP numbers. That's the only negative I could make out, but that's another thing which he told. So overall, if we see with whatever he has spoken today, the way his body language was, I think he's a pro-growth person. He wants the growth to come back, and now we have a double dhamaka in terms of personal income tax cuts, and now we have interest rate cuts. So there is no, we cannot say there is any complaint from government side, whether it is finance ministry in terms of budget or whether it is RBI in terms of putting the interest rates down. So government has done or they are doing whatever is required. Let's not forget that RBI has already introduced around 1.6 lakh crores of liquidity. The CRR cut was already done by 0.5% for the last governor. So a lot of measures have already been taken to take the economic growth forwards. So all these things are there now and everything is looking positive. Then why did the markets fall? So it is very tough to understand and very difficult to understand. But what I think is it was positioning. It was that the FIs came with a lot of shorts. And with the last 2 days, how the rupee was trading and the bond deals were showing that the chances for rate cut are less and they came with a lot of shorts. But opposite thing happened. RBI governor gave a rate cut and probably he set the path for now the changing interest rate trajectory going forwards. So I think it was positioning. Now let's analyze what should we see this fall and how to interpret this fall, or let us take whatever are the reasons possible to actually set our path forward. So first thing is we were already long in terms of derivative position. We should continue to be long. Our stop loss has not been hit. We have taken the stop loss above from 47.22 500 to 23.250 levels. It is still protected, and even today also the Nifty's close which has happened, it's around above 20-day moving average. So the critical averages, both the indexes have again closed green. Nifty has closed above 20-day exponential moving average. Bank Nifty has closed above 50-day exponential moving average. So there is no issue at all in terms of levels. Also, the recovery which was there in last 45 minutes, that is why I'm saying it was only positioning. The recovery was, at one point of time, Nifty was around 150, 160 points down, but it covered almost all its losses. And at one point of time, it was trading around 20, 30 points down only. I don't know what is the average close, but it was somewhere around that only. Bank Nifty also at one point of time was around 500 points down. It recovered almost 350 points and it was trading around only 150, 160 points down, which means there was a major recovery. It means that it was positioning which they wanted to square off their positions. They were short, so they brought the market down, and in the last 45 minutes again tried to cover the short positions, and probably some kind of long build-up could have happened as well. Yes, the numbers will still come negative in the cash figures. I'm not denying the fact, but the recovery for last 45 minutes has to be taken into stride for taking any future decisions. According to me, the market still remains long. First, because it has not broken the critical averages. Second, the last recovery which has been shown. But now we'll dwell into single factor and try to analyze why I'm still bullish. So first thing I already told that it is close above averages. Second thing, recovery has happened. अगर market को गिरना ही होता तो recovery नहीं होती आज. They would not have gone for recovery. Again, selling would have started. So I will be very surprised if at all the market breaks those levels of 23 to 50 in the next trading sessions. I'll be very surprised. But let's see other factors also now. So this week and probably the last week has been lot of data driven. We have budgets, we have RBI policy, we had Fed meetings, we had results, Trump taking charge, sanction, tariffs, etc., etc. There were a lot of things going on, and market has swallowed, or probably Delhi elections. Market has swallowed now everything. Now there are no fresh triggers. Now only some news which Trump will tell or some domestic news here and there, but all the major events are now over. So a very good professional or a good investor will now sit down and analyze on Saturday and Sunday what exactly has happened, what is positive, what is negative. I will try to give my analysis on the things. So let's take one by one. In terms of state elections, it's a good boost. There should not be any complaint. I think Maharashtra elections was a sweep out, and in terms of Delhi elections also, it's looking good. Even if BJP does not win, but they will make some landmark into the seats, and they are not looking bad at all. So that's a good factor. So politically, yes, stable. Dollar index. Dollar index at one point of time before the Trump taking charge actually went up to 110, and that's why I told that we sell on news. We have not even trying to touch those levels. Probably the top is over. We will not be touching now those 110 levels of dollar index. This is a strong feeling. So we are still trading below it, around 2.5 points down. We're trading at 107.5. So good news. Crude. At one point of time, it went around to $85, $86 just 2 weeks before. Now it is trading at $74. So approximately, 15% cut. So we are again in a good safety margin as far as the crude is concerned. Not an issue at all. Rupee. Yes, rupee has been a dampener. Rupee has been an underperformer. Rupee has created a lot of havoc because it is continuously sliding. It may slide further down, but remember, whenever the FIs come to markets, they come with hedges and they always take a currency hedge. Considering that dollar may continue to remain strong and rupee may slide, they are always on hedges, and I don't think that is worrying them. And moreover, rupee will also now start stabilizing. All the economists are suggesting that the last bottom which we are seeing on rupees 88.5, most of the economists are saying that it will not cross below 88. So that is also at the flag end. And one more thing I told you in my some of the previous videos, when you enter the market at the lowest rupee, it actually helps you, because if the currency strengthens further, it only adds to your portfolio. So current portfolio goes down, but your upcoming portfolio, or which is the fresh money which will bring into India, if at all you bring it, that will always be an advantage because you're bringing at a lower currency price. So that's the best time when your foreign money can come to India, of course with a hedge, because these people do not bring large positions without any hedge. So rupee is also trying to stable down. It's looking like it is close to a bottom. So that's the third parameter. Now let's say fourth parameter, which was budget. There is absolutely no complaint. We already spoken in length. I'll not go deep into it. Budget has set the path for our GDP growth going forward. There is no issue at all. RBI policy, it has given you a thrust which was required for the economy. It is now targeting to bring the credit cost down. It is only advantageous for many of the companies that the credit cost will come down, and the interest rate downward cycle has started. So no complaints. GDP growth, very important. This was the reason why the sell-off was triggered. Today also probably the sell-off intraday which happened probably was one of the reason was this GDP numbers. But if you see the speech of RBI governor, if you see the fast-moving economic parameters, we are seeing a pickup. So our manufacturing index came at 57.1. It was at 6 months high. Auto sale numbers in January was YOY pickup around 15%, looking very good. The results of autos have come good. If you see even Hero Motor Corp results yesterday, they were good. The inventory was good. Even today's RBI governor told that they are seeing a continuous uptake in the rural economy. With the personal taxes being cut, interest rate going down, it will only be an advantage, and probably the kind of food grains cultivation that has happened, it is again an advantage. And the Kharif sowing also has been good. This was again mentioned by RBI governor. That's the reason why he's giving the inflation target of 4.2%. So if inflation comes down and the personal taxes being reduced, more money into the hands of people, and we'll see the growth of economy going forwards. That is what RBI governor also told. That is what the fast-moving indicators also showing. He in fact put the FY25 growth at 6.4%, which means in the last quarter it was 5.5%. So if we have to reach to 6.4%, which means he's expecting this GDP, October, November, December GDP growth to be high, and also January, February, March GDP growth to be higher. So again, the worst of GDP growth is behind us. It is not in front of us, it is behind us. So that's again a positive. Now comes to, let's say, tariff war. जिस पे सैंक्शन लग रहा है वो नहीं गिर रहा, जो लगा रहा है वो नहीं गिर रहा. US markets are not going down when they're putting tariffs. जिस पर टैरिफ लग रहा है चाइना के ऊपर, it is not going down. So why do India have to worry? And we already analyzed that the tariff war will only be a positive for India in many ways. Trump has not even spoken about putting tariffs on India. Modi ji again going on 13 Feb to US. Things are looking good from there as well. So when tariff war has started and the world is not reacting, why should we react? And anyway, the tariffs are much lower than initially thought of. 60% was the initial tariff thought of by China or by the markets, which it told Trump told. Today it's only 10%, and that is also market is trying to just take it on its ride. It is not reacting. So why will India react? It cannot be a reason. Now comes to the most talked about reason, which is the earnings. Earnings खराब आ रही है जी. Yesterday we had 6 results from Nifty. ITC inline numbers, Britannia beat on numbers, Hero MotoCorp beat on numbers. The results have started coming out to be decent. It is much better than Q2 numbers, and the commentary from the company have been very good. They're expecting to meet their guidance for the overall year, which means they're expecting that the last quarter results will also be very good. So again, a thumbs up. If you see one more thing in the results, what is happening is the profits which are going down are only going down on the margin part. If you see the top line, most of the companies have given a good top line. There is no issues in the top line. The issues have actually been on the bottom line. That is because the demand was not there. And to give those kind of discounts and all, to gain those top lines, to not lose that market share, that is why the margins have been reduced, and that is why the profits are less. But there is no issue on the top line. And with the growth again coming up, picking up, the numbers could only become better from here. You see the numbers from Bharti Airtel, fantastic numbers. ARPUs have gone up around 245 ARPU. The profits have soared, the revenue have soared. Excellent set of numbers. So I would not say the numbers are pretty weak. The numbers are looking decent as of now, and they're much better than Q2. So then why should the markets fall? So if you combine all these things, I am not getting any major reason for the markets to fall. Today, yes, we did not get the rally because market was prepared for a rally. Everybody was talking that, first of all, people were talking that 2.5 interest rate will not come because the rupee is falling. It came for a surprise. So a lot of shorts got trapped. Moreover, people told if interest rate cut will go, market will rally, etc., etc. See, the bigger players, they will deploy money, and they will take positions when there is a fear in the market. They've created that fear. They've created that panic now. Now, all the rallies will be sold off. So what will happen now? If at all the rally will come now, people will remain fearful. Whenever they're बोलेंगे भाव जैसे ही आएंगे, they will just sell off. Whenever they'll get their prices, we will see a sell off in the market. That's what the people want. They want the shares to be available to them to buy at lower prices, and they want quantity to be there. That will only be there when there is fear, there is panic. The kind of recovery which has happened in the last 40 minutes was again very beautiful. And according to me, nothing is looking negative as of now. Yes, there is a massive FII selling. I will not deny the fact. And we'll have to only now track the FII numbers according to whatever other reasons are there. They are not going to impact, or they are not impacting the markets. All are looking benign. Either they have formed the bottom, or they're very close to the bottom, or they've already started showing green shoots in terms of next quarter. So I would not be disturbed by any of the global and domestic factors now. All the events are out now. Probably the market should start gaining from here. The only key now remains is the FIs. Nothing else will not stop the markets now. And according to me, FIs should also not find a reason. See, we all say that markets are forward looking. Markets always try to discount, which is looking 6 months forward, 9 months forward, 1 year forward. The 1 year forward numbers in terms of GDP, in terms of companies earning, they're all looking good. And these are the levels to buy. A FI investor who has been trading in this market for 100 years, do you think he will not take advantage of these kind of fear in the Indian markets? The kind of number, the kind of share prices that now they're getting? I don't think so. So there will be buyings. Yes, they will keep on frightening the people so that when they take positions, there are sellers in the market. They've done that today. But considering all these facts, I still remain bullish. According to me, we should see 24,000 levels in February. I still remain with that view, and I've given all the reasoning for it. See, I may be wrong. If at all the 23 to 50 levels get broken and we convincingly close below it, yes, my stop loss will be triggered and I'll be out of the positions. I will have no two thoughts in that, and we'll believe it is something. There is a higher compulsion for FIs to sell. We don't know the reason. They are selling means they're selling. So if I give the numbers, $450 billion of money has gone into American markets last year. Today, till yesterday, even for 30 days of January and around 5-6 days of February, $158 billion of money has already gone into American markets. So $600 billion of money has gone into and flown into US market from emerging markets. $600 billion. Out of that, they only sold $30 billion in India, and we're getting panicked. $600 billion of money has gone into American market. Guys, there's a limit to absorb everything. You cannot put all your eggs into one basket. Every big investor knows it. I think there are a lot of money already flown there. Government has already taken a lot of steps to take the economy forwards. The results will be slow to show. It will not happen overnight. Some of the things will happen overnight. Some of the things will take time. Of course, this budget thing will of course take time, but other things can kick off from tomorrow onwards, or they've already started kicking off. Yes, the budget thing will take some time, but forward looking, since the markets always see future, I see no reason for the markets to actually sink. Yes, they may slow to go up. They may have, we may not see 25,000 levels very soon, but the market cannot sink from here. There are no reason for it. There are absolutely no reason for it. So according to me, I'll still remain bullish, and that's why I made this video today on India's specific things. I just made this video to actually give you confidence in terms of what the Indian markets are looking like. I've taken less time on global markets. See, I could have gone on Nifty stock by stock and given you the reason why I'm so bullish. So I would have seen. So for example, if you see around 55% as of now, the companies which have announced the results, they are upgrades. 50 or 60% of the results have already seen upgrades. और जिनके डाउनग्रेड्स हैं उनके बॉटम के पास हैं. So for example, if I give you a downgrade in, let's say, Britannia, let's say 4700 levels, so it's trading in 1400 kind of levels. So the जहाँ downgrades भी हैं वहाँ वो bottom के पास है और upgrades बहुत दूर के हैं. And you see SBI result yesterday. Beautiful number. 88% YOY profit growth, the provisioning going down, the net NPA is going down. What else you need? What else do you need? Any banking number? So I think it was positioning today which actually brought the markets down. I'll still remain bullish. I'll change my opinion. If at all the FI selling is too high and we start trading below 23,250, yes, then we'll concede that the selling pressure is too high from FIs. They are probably seeing a lot of chances in the other markets, and we'll concede to it. As of now, we are bullish, and we are looking forward towards 24,000 levels. I still remain bullish. I've taken a lot of time, but I thought let me explain this in detail. I would have actually gone stock by stock on Nifty and explained the things, but it will take too much time. So that's all from the video today. Thanks for your time. Thank you.